What's up, everybody? Just quickly before we go in, this is gonna be pretty much a video where I think majority of the people will learn a lot of things. It'll pretty much be an insider look of what I've actually been doing while I've been a little bit off. Just a little bit of an example of actually what I have been doing, because I don't know if you have noticed, but I've not been equally as active, and it's simply because I've focused on a lot of other people. Um, and so I just wanted to show you what I've actually been up to, what I've done, what I've been doing, etc, etc. And I also, of course, as demonstrated quickly, want to go through pretty much my FTMO account, what's happened to my FTMO account, etc, etc. And as you can clearly see, it's looking good. It's looking good. So yeah, I actually, as you guys can see, had a 10k day. All right, I was a little bit in drawdown, but I had more or less a 10k day. As you can see it right here, this was one of the trades pretty much I've taken, where I took pretty much sell off this high. I think this ended up being how many pips? I don't know how, if you can see how many pips it was, but yeah, you can calculate it. But it ended up being per 5 lots, 4,000, and of course 4,000 times 3, that's 12,000. So $12,000. Pretty good, pretty good. But also, yeah, hopefully enjoy this. So hopefully enjoy this call, and yeah, I know you will also talk about it in this video or this talk. But yeah, we saw those 2 days rise, and of course they rose pretty much. And as long as we stay up here, the uncertainty will grow in accordance to the treasury markets. Because what the rates, and when the rate stays this high, that pretty much means that we have something off with the treasury markets, where there is not enough buying in treasury markets, which is a little bit of an uncertainty. Now, I think that will be fixed, because I think there will be lowering in interest rates, etc, etc, meaning that will push down the yields, so we don't necessarily need to worry about them. However, this month, alright, from this month, alright, when they're not lowering interest rates, because am I anticipating lowering of interest rates this time? No, I'm not. I'm anticipating 4.5 staying, right? So after this, on Wednesday, right, FOMC event, you're gonna see an explosive move towards the upside on the dollar. You're gonna potentially see some uncertainty in NASDAQ. Uncertainty in NASDAQ usually means bearishness coming into NASDAQ. And you're gonna also, of course, see yields potentially stay stagnant here, and treasury market also stay stagnant until they have lowered interest rates. You'll also hear a lot of talk about big recession coming in, and you'll also hear a lot of talk about some like treasury crashes, and you're gonna hear talk about rising inflation, blah 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 blah, and all that is bullshit, because all of this will get solved. I just wanted to give you a little bit of headwind, because of course this will cause major opportunities to occur in the markets. When there's a lot of uncertainty, there's also a lot of opportunities, and so I just wanted to give you guys and prepare you guys for overall what's to come. All right, in terms of the major uncertainties, which you guys then, if you know what we were waiting for, could exploit in a much more or and better way. And that's exactly pretty much what I wanted to give you guys with this little bit of a note taking here. Other than that, let's just dive right into this call. So just starting off, we're gonna just load up Forex Factory here. And that's why I also want to start talking about NASDAQ a little bit ahead of everybody, because I think it's gonna be important. Yeah, we also saw Warren Buffett quit, bro. That was a little bit sad. Anyways, as y'all can see right here, we more or less have expecting a beautiful Monday, right? We more or less only have ICM services with PMI, and we also of course have some CPI for the Swiss people. Other than that, I'm recording, so don't worry about it. I'm recording all of this. So other than that, we pretty much don't have anything we need to look out for. We have GBP bank holiday, but I don't think that will cause any major, problems, because of course we're looking for euro, we're looking for EURUSD, and we don't have any major bank holiday for European Union or anything like that, or Europe as a whole, except for the UK. So personally, I think the volatility is going to be very good. I think if you're trading NASDAQ, it's going to be good. So you can definitely trade on Monday, personally. Now the same thing goes for the Tuesday here. Tuesday looks even better than the Monday. So Monday, of course, we might experience some consolidations in terms of huge A whatever, causing a little bit of interconnections to other currencies, which will, more or less consolidate here. And that also goes for, like, I would definitely not trade GJ, right? Because you all have a bank holiday on GBP and you have a bank holiday for JPY, or the Japanese yen. But other than that, you don't necessarily need to worry about any pairs or anything like that. If you see a good setup, you can take it. But of course, I think the 16:00 news will also give us some tailwinds. Anyways, the Tuesday here also looks very, very promising. It also looks very, very good, personally. So I'm pretty much or I'm watching out for STAs pretty much Monday, Tuesday, and even potentially Wednesday, Thursday, and Friday. And all the STAs pretty much we're gonna see. We're more or less gonna take, right? Because this or next week is gonna be the big expansionary week. All right, we're gonna see big expansion downwards for euro, big expansion upwards for the dollar. And the only thing I need to say more or less is that throughout this whole week I'm looking for major time-based liquidity getting taken out, and the day or the day after we'll pretty much see that getting taken out. That's gonna be the day after that we're gonna see the expansion towards the downside for euro, upside for the DXY, potential little bit of downside movement for NASDAQ itself as well. But not major. Like, I'm still looking for NASDAQ to be very bullish. I would be very bullish trading NASDAQ this whole week as well. And I'm gonna explain why as well. But yeah, overall, I'm looking for throughout Monday, Tuesday, Wednesday, Thursday, and Friday STAs, with exception potentially being Wednesday here with FOMC, right? We have federal funds rate, but a lot of people are still pricing in 450, including me, so I'm looking for 4.5 priced in. And that will of course cause just a little bit of a rise in dollar, not much, but a little bit of a rise in dollar. But over the next coming weeks, when the uncertainty rises, you're gonna see a rise in the dollars here, because they have a higher rate compared to everybody else. It would just be logical for the central bank to move the currencies into the dollar, which we have also seen in terms of COT, etc., etc. Is meaning, like, we are bullish. Like, that's literally what this whole week means. So we are going to be extremely bullish for the dollar and extremely bearish for all currencies against the dollar. Currencies, not other assets, but currencies specifically against the dollar. And you're looking for Monday, Tuesday, Wednesday, Thursday, Friday. Also something to take into consideration, just the time-based liquidity sweep. After that big time-based liquidity sweep, we are just looking for an STA. Simple as that. Alright, for the DXY, buy side liquidity. For EURUSD, or vice versa, for the DXY, we're looking for sell side time-based liquidity getting taken out, major sell side time-based liquidity getting taken out for an up move, right? And for the EURUSD, we're looking for major buy side liquidity getting taken out for the major down move. Meaning that's our focus, liquidity on buys for euro, sells for the DXY in terms of liquidity. Let's just then move on. Alright, so moving into NASDAQ here a little bit, and I just wanted to quickly show you guys, this is also pretty much something I do, and I don't think I've talked about it, but yeah, I usually look at multiple different COT datas, simply because, of course, it's good getting multiple sources, but most likely you'll see multiple sources being very closely like, they are to be very closely linked in terms of numbers of COT, right? So you can see right here, because we are looking at the red line right here, and you can see we have seen a rise right here. The thing I like with this is that you can actually look at the numbers here as well, which is very good, right? Very, very good. So you know, when you're looking for something, or when you have seen something which potentially need to confirm, go and look at other sources. The more sources you're looking at, the better. But you can see the same. You can see pretty much we've seen experienced the same thing here for NASDAQ here, and this is something particularly I've been talking about, and I've said to you guys to focus on, because whenever we saw or see a rise in the commercials, which we now have seen, because whenever we see this pumping up, and as you can see, we have seen this pumping up now again. That's when we were expecting new all-time highs, and that's exactly pretty much what I'm expecting now. Not new all-time highs this next week or anything like that, but in the next coming 3-4 months, I guess we're gonna see new all-time highs for NASDAQ, new all-time highs for Dow Jones, etc., etc. So it's pretty much no bear market, which everybody's talking about. So I don't think this is gonna be leading to any bear markets or anything like that. Like I said, now we're looking for all-time highs, and it looks very bullish, right? And so I'm gonna stick to a bullish bias. Very simple, very simplistic, not at all difficult, I would personally say. And as suggested by the COT, commercial, specifically Wall Streeters, once they get going in with some money, and I think they're gonna flow in when we're seeing the whack of spring, which we are to look for down in here, or that just simple time-based liquidity sweep or sweep of liquidity. Now, just going into NASDAQ seasonalities, this is something I wanted to touch upon also before we go into specifically NASDAQ itself. You can see we are now this next coming weeks, let's say, gonna see an sweep to the sell side liquidity. So I'm experiencing some. I'm going to, and you know, hear me out because I think this is very good explanation for something you could look for. Last week I looked for an high sold in on NASDAQ, and we got a little bit of a high sold in on NASDAQ, but then it pretty much reversed towards the upside, meaning it took the terminus, which overall caused us to pump like crazy, right? Pump like crazy because it was a short squeeze, right? A lot of short squeeze. But I think that's now done and dusted, I think, and so you need more accumulative liquidity, meaning you're gonna see the smart people at least reach for some sell side liquidity here on NASDAQ. So what I would personally look for is that I would stick bullish. I would have a bullish bias on NASDAQ. However, the only difference is that I would personally focus in on looking at buys. So I would not take any sells. I would focus in on taking buys and looking for a sweep, and only taking buys after the sweep. Hopefully everybody's with me here. So what I'm saying is simply that I would be bullish, but I would wait, alright, and for buy setups until we have seen the major sweep of sell side liquidity. So that's personally something I would look for. And as you can see, we've more or less always seen that throughout 10-year, 5-year, and 2 years of data. So that's simply something I'm looking into, zooming in here, right? So this is something you can look for seasonally. And of course, rest of it is just optimized. So that's good, right? And that's of course also confirmed by the COT, because I think the commercials here need to increase a little bit more. But you can see the large speculators or the small traders, as you can see here, have actually, like, look at their position sizing. It's more or less at new all-time lows, I think, which is a very, very good sign. Very, very good sign. So if we go to 3-year more or less here, you can see right here, I think there's a new 2-year lows, yeah, so you can see here, we have more or less never been here at this low of a state for small traders, as you can see the blue line here, and the last time we ever saw the blue small traders, or small investors in this case, was overall back with COVID. You can see COVID was here, right? Or COVID was potentially a little bit earlier, but this was the recession period after COVID, right? And the last time we ever saw this was the low level here, was during COVID and the aftermath of COVID. Whereas now we have seen it again, and now literally we have the fundamentals being amazing still, and I think the quantitative easing is coming. So I think they have everything under control, if I'm honest. So you don't necessarily need to worry about anything, which brings a lot of opportunities, which is why I wanted to talk about this in the beginning. Of course, here's also another big move you could watch. Whoa, same as the euro drop, right? It's real amazing, real amazing. Anyways, I think that was it here for NASDAQ. We're gonna move over to TradingView, of course, a little bit here, and we're gonna talk about. Before we go on, we're gonna talk a little bit about home builders and NASDAQ itself as well. It's gonna just move over to the home builders here, and you can actually see the home builders is looking very as good. It's looking very as good, as you can see. And home builders is a leading indicator for NASDAQ, right, or for the whole stock market. And as you can see, we have taken this time-based liquidity, which we have talked about, right, for 2 months back, right? We talked about this. And then we more or less projected out, well, after this we would sell it in a low, terminus, etc., etc., as we have taken out enough liquidity, and then we would see home builders rise. And home builders is more or less a leading indicator. So if this continues up, we are very freaking bullish on NASDAQ, and this is a very, very good sign, just saying. The same thing, we talked about the wicks topping out, and look at the wicks here. Amazing, amazing. So it's just climbing down lower, it's just coming down lower. Now, we can see the wicks is still a little bit high, which is why I'm looking for a little bit of downside potential here. But what you can watch for is just a bearish day on home builders. Now the next day on NASDAQ, because this is pretty much a day ahead out, personally say. So the next few days after the home builders has been bearish, if it's bearish, right, potentially, let's say it's bullish, right, then you're not looking for anything like that. But as we have seen seasonally throughout time, we usually pretty much pump, right? We usually pretty much dump, do a wipeout spring or liquidity sweep, whatever you want to call it. We more or less potentially at least have the potential of seeing it, right? And if we now see home builders acting as a leading indicator drop down lower prior to it, well, there you have two major confluences for it. You have a forward confluence and you have an statistic confluence for it. And so, you know, you have then two major confluences, I guess, and you can even take this as an external, right? And then you have pretty much looking for buy side liquidity if you're trading STAs, and then you would just look at sales, look at sell side as drawn liquidities, and there you go, there you have STA. But I would not, like I said, I would not short it. Instead, I would actually pretty much wait until home builders is bullish again. Alright, so once we have seen this a little bit of a drop here, potentially reaching for this, and it becomes bullish again here after reaching this previous time-based liquidity point, then I would buy instead as an STA and having the home builders as a leading indicator with seasonalities also as a statistical data for it. Look at this, isn't it good? And then you can freaking buy and hold to new all-time highs and make big bucks, alright? Simple as that. Or if you're pretty much invested, wait for a little bit of dip here and then invest in your stocks, in your stocks, American stocks or whatever, and there you go. There you have a good buying opportunity for stocks as well. That's how you do it, right? Anyways, was there anything else I wanted to touch upon? Yeah, a lot of people. I sent you guys a real good video earlier. I just want to talk about this. We have seen pretty much gold going up for more or less, you know, the last couple of months. As you can see, month over month, it has been crazy bullish. Personally, alright, I don't want to sound too optimistic. I love this period when we were down in here. That was, oh no, I was not alive, but this period, right, this was the best period when I traded SDAs on gold. And then we saw this big rally here, which I've not traded. But no, I think actually gold is topping out, alright, and I think this is a very good sign for the overall health of the economy, right, because gold has been overall leading indicator for uncertainty. We've talked about it. It's a safe haven asset as well. Now I think hopefully gold has topped out, because then the money in gold can flow to other assets, other more risk on assets, be it crypto, whatever, right? And you can see silver being a leading indicator to gold. As you can see, silver has actually topped out, right? It has not broken these highs from last year, right? So silver looking very bearish. You can see we have filled this FVG, whatever you want to look at, order flow, whatever you want to look at, volatility, whatever. But as silver is a leading indicator for gold, silver has not made new all-time highs. You can call this an SMT more or less, and real SMT between two assets, and has actually dropped down lower. And so, yeah, it's a very good sign for the overall health of the economy. Not a very good sign for also crypto pumping, etc., etc. So yeah, wait for a little bit of a dip here, and you can see oil prices also continuing down lower. As you know, I took out my oil position. I shorted oil up here, and I think up here at least, or potentially up here. I don't know, either here or here. I sent it in trades I take. You can look at it, and I pretty much ended up profiting like on the short. Yeah, more or less $26 a barrel, I guess, profit. But that was good. That was good. So one of my larger trades. But yeah, I more or less finished that one. And personally, I'm looking for just always stagnating. But this is also a very good sign for overall, health of economy, right, of the world economy, since you can project oil with inflation, right, the purchasing power, etc., etc. And if oil goes down, you have one less problem, because that pretty much, is a leading indicator for rate, you could say, because as it's a leading indicator for inflation, inflation overall causes rates to get hiked, etc., etc. If inflation is going down, like oil suggests, and oil is of course a leading indicator for why inflation could happen. Inflation is literally just the increasing price of goods and services, but and that's literally central bank language. So of course, when we see oil and other commodities starting dropping, very good sign of overall that the economic slowdown, actually it's a sign of economic slowdown, and it's a sign of deflation, which of course leads to quantitative easing, which is the best period for crypto, for that whatever asset you're in, because that means like literally zero rates on things. And I think we're heading for that after sweeping the buy side on the DXY and etc, etc. So look, we have like such a close lead on the economy, such a close lead on all the currencies. That is crazy. The opportunities you already can predict with this is crazy. Anyways, finally, do you have any questions about this? I just wanted to cover all of this before. I know potentially a little bit complicated. You can rewatch this. It's all recorded. But, I just wanted to cover NASDAQ because, long-term investments, it leads into crypto, bleeds into everyday life, etc., etc. And also some trade NASDAQ, etc., etc., including me actually. But I'm gonna trade the buys like I said. But now we're gonna look at currencies, so don't worry about it. Just wanted to quickly cover this. So you can also see how I analyze it. So now I just use statistical and a leading indicator. That's literally how I trade. So for this, I would use home builders as a leading indicator for NASDAQ as my external. And of course, you would just confirm it by COT and seasonalities, and you would overall trade normal time-based liquidity or major liquidity points. That's literally how I analyze it. So that's something you can write up into your notes if you're interested in trading NASDAQ. That's literally how I trade it. So that's how you trade SDAs on it. Any questions, guys? So far, let's see. I'm gonna be a little bit quiet so everybody can just think. I don't think it's bullshit. No, I don't. I think that's correct. I think the SMT is correct because I am, mind y'all, I'm bearish statistically, right? But I'm not looking for sells. I'm waiting for it to drop, and then I'm looking for higher prices. So that's something I'm looking for. So I don't think it's something BS. Yes. So mind y'all, I am bullish, of course, long run. In the immediate term, I'm bullish. Short term, I'm bearish, but I'm waiting for the sell side liquidity to get swept. And we can look at NASDAQ so you can see what I'm looking for. We say buy side on DXY to be taken before bull market. Yes, I am. Yes, I am. In terms of altcoin season or whatever you want to look at in crypto, yeah, yes, definitely, definitely. Because I think we would want to be in a quantitative easing period, and I think the quantitative easing period is gonna come when rates is lowered, and rates is lowered 3 months from now or something like that. I think that's just my projection. Of course, that could change. Anyways, let's just overall go to NASDAQ here so everybody can see pretty much what I'm thinking. So as you can see right here on NASDAQ, we can look at S&P 500 here. We can look at these right here. But as you can see right here, you're gonna have this SMT, right? And I don't think this is bullshit right here. I don't think this is bullshit at all. Instead, I am short-term bearish, like I said, and I'm looking for some equal lows or some major sell side liquidity to get taken out. Potentially this right here. You can see this right there, this sell side, getting taken out. So personally, but I would never short. Instead, I would wait for the lower prices, and then I would look for higher prices. And the higher prices I would trade, but not the lower prices. So I would not trade this portion, but I would trade this portion, if you get what I mean. So in terms of like buys, I would have a short bearish bias, but I would never trade a short bearish bias. Instead, I would stick to the long bias and stick to like the long-term bias and the immediate bias, if you get what I mean. So when I trade this, instead I would wait for overall like I would wait for overall bro, I got scared. Anyways, yeah, I would wait for the long-term prices, right? I would wait for the longs, and I would wait for the new all-time highs. And new all-time highs is coming after we've seen a short-term drop, and so then after that I would be bullish and I would look for buys. But I'd never trade like this short bearish buys here. Is that I would wait for the major liquidity sweep and then buys. And of course, you know this, you know when the drop is coming, because you have a leading indicator now. So you can look at the home builders, you can look at what home builders is going down. 1 day later, you're going to see NASDAQ drop, etc., etc. And of course, also seasonally, we usually see this mid-month, so we should see this potentially projected in this week, having a bearish NASDAQ or anything like that. So, yeah, hopefully you understand me. Do you understand? Let's see. Get it now. Makes sense. Perfect, bro. Perfect. I'm sorry. Potentially I did not even cover NASDAQ. But yeah, like I said, look for sell side liquidity here for the left side of the curve right here. Wait for that to get swept. Like wait for the time-based liquidity to get swept. Right? And then overall, look for higher prices. And when the higher prices comes, like when you see the change in state delivery, when you see home builders go up again, etc., etc., then you can then you can for real go in and look for longs, and you'll have a real high probability setups coming into markets. Hopefully that makes sense. Anyways, let's just move on and let's just switch a little bit over to but that's like my overall bias for NASDAQ. Like you go in and look for STAs, etc., etc. If I take anything, I gotta tell you guys. But prior to that, we're gonna go just quickly into here, and I'm gonna just show you guys quickly a video here. I sent you guys in analysis, and I think I even sent you can short the Tuesday NASDAQ like open. Let's see what I sent in here. I just want to just see here if I sent any information here about NASDAQ. Yeah. Yeah. Okay. You could. Yeah. This is something you could do. Like I'm just looking for a little bit of dip here, and then you can look for high prices. That's literally what I think I projected here. And of course that's projected here, etc., etc. You can see it right here. This is something I'm looking at. Like, just look through this. But this is something I wanted to show you guys.
Is higher than any of
before we overall go in and talk about yields and treasuries and everything like that. Of course that's leading into NASDAQ, but that's why I'm looking for a little bit of short-term short bias or a little bit of short-term bearish bias, because the uncertainty in treasury markets. But let's go into this.
14 billion is higher than any of the forecasts I had seen.
The best approach there would be greater fiscal discipline, which we're not likely to see.
The real risk is in our treasury bonds, because the folks that used to buy treasury bonds, the Fed, China, Japan, no longer buying. You've got
Yeah, so like you guys saw pretty much here, this is a video I would recommend you guys watch. I just clipped to get a little bit of videos here.
China, Japan.
From different people in terms of previous central bankers, etc., etc., of what overall their major predictions is, as I'm listening majorly to what central bankers say. I don't I don't necessarily listen to what Wall Streeters or anything like that saying. Just central bankers, and what they're pretty much projecting is just uncertainty in treasury markets. But I think it will be resolved, as I'm very positive. Now we gotta talk about. You can read about it a little bit here, what it means. Let's see where I sent it. Yeah, you can read a little bit about here, what it means. I can also show you guys this. So you can see right here. This is overall what the central bank, what the US government, etc., need to refinance this year. As you can see, this is from the previous years, and this is overall the amount of government debt maturing this year. So you can see 2026, 2025, like this year, it's more than 7 trillion, and you can see how much, all right, how great of an difference that is compared to other years. So this year is very important for the treasury markets, which means you're going to see a lot of movements in treasury markets because there's going to be a lot of uncertainty, which of course is the next uncertainty part leading into NASDAQ, all right? So that's something you guys need to just take into consideration here when looking at the markets, and that's also something I'm looking for because of course this will present itself with great opportunities. Like I said, this leaves the Fed with only one option, right? And that's to cut rates in the next period. So next month, not this month. And of course, this means that we're going to go into a quantitative easing period, meaning lower DXY, higher other currencies. And of course, that means like more or less Wall Street bailout, meaning higher NASDAQ, Dow Jones, etc., meaning they can just pour in money because now they can literally borrow money, pour into this, and they don't need to be worried. Are you going to see leverage, etc., go through the roof? What I mean with leverage is like literally borrowed money going into the markets, etc., pushing up prices because you can borrow whatever you want because there is literally no like a rate, like you don't have any rate on it, so you can just pay back later, and which is a very good thing, right? Very good personally. So I think that's going to lead to major short-term growth, right, of stimulus. I'm sorry for the. Oh, okay. Okay, bro. She's super bad. Oh my gosh. Anyways, let's just go on. Let's go into deals and treasuries, I guess. So just quickly talking about it, which the thing is I've previously mentioned here. Quickly just mentioning, talking about this a little bit. So as you guys can clearly see, you already know what we're looking for. We saw these 2 days of rising treasuries. We don't necessarily want them to go higher than this, right? And we don't want them to go lower than this. We want them to stay in this consolidation period for 1 month more or less, 4 weeks now, until we go lower with the yields. It would be very good if we go lower, not higher. If we go higher, that would cause major problems, of course. And so that's something you need to watch out for. But I think it's going to go lower. Now the same thing, you can see these 2 days we more or less predicted here for the yields. You can see the Thursday and the Friday. Like I said, I want to see them going higher. And look what happened. Like look. And you can see right here for the US30Y as well, they've also gone higher. Very good. And you can see the treasuries has gone lower. And you can see now we are looking for lower treasuries now again. So lower treasuries, consolidation downwards now. Not anything like other than that. We're gonna see a lot of uncertainties if this goes higher, etc. But all in all, this means crazy higher dollar. All right, crazy higher dollar this week or the next week. I'm mega bullish on it, and you can see why we're gonna mention all of this. So going into the DXY here. Like I said, the imbalance is just growing, bro. Now it has grown, and I think it's gonna not grow. I think it's gonna go down until we have seen the drawn liquidity more or less perfectly aligned with a real imbalance. And if you're wondering what a real imbalance is, please watch my previous call. So please watch the notes. Alright, you should have done it by now, and just do it. Alright, I promise you guys you won't regret it. Anyways, as we are looking for extreme high prices on a week-to-week basis. So on a day-to-day basis, what are we looking for, right? Well, we are looking for, and this is the drawn liquidity. So after this, I'm looking for bull run, etc. But I think we need to definitely take out this buy-side liquidity, this buy-side liquidity, and the buy-side liquidity up here, because we have more or less exactly real equal highs up here. You can see exact equal highs up here. So as you guys can see, we more or less traveled into our level right here, which we more or less predicted were to be the low. If you think about it, we actually did that. Then after that, we more or less saw us reversing here. Now we reversed in a very particular manner. We took out some sell-side liquidity here. So do I think we're gonna reach down all the way to these equal lows here? Well, personally we could. So we could see a weekly low sweep. And I mean previous weekly low, like this time-based liquidity sweep. Let's see. This you could see next week going down in here. But as I'm very bullish now, because of the treasuries, yields, right? I'm looking for an extreme higher dollar now in terms of this week, etc., etc. Which means, personally, I'm gonna do two things. I'm gonna be a little bit more aggressive here because I have a little bit more of a clear bias. I have a clear bias because it's pretty much externally aligned. It's pretty much aligned with seasonalities. It's aligned with 6 days of distribution. It's aligned with all the things I'm looking for. All the confluence is pointing this. So I'm looking for, and I'm gonna pretty much look at any quartile range sweep, meaning an Asia range, just sweep. Alright, if that fails, so I'm gonna look for an Asia range like this. I'm gonna look for a sweep of that Asia range, and I'm gonna look for high prices after that. I mean an STA higher, so time-based liquidity sweep like that. Or if everybody understands, if everybody is on the same page here, I'm gonna look for this equal highs get taken out. I'm sorry for getting my voice lagged. Alright. So that's what I'm looking for. However, if that fails, well, that's pretty obvious what we're going for. So if that fails, if that terminus gets taken after the displacement towards upside, we are looking for the previous weekly low getting swept, and then we are looking for high prices. So that's literally the two different setups we're waiting for. That's the two trades we're waiting for. And now the same thing goes for Euro USD as well, right? So we're looking for, as you can see, we swept out this right there, exactly. We are looking for any quarter range high sweep, and as we are this bearish, alright, on USD, I think we might even leave this, right? We might leave this, and we might just look for an inequal range sweep here. As I think we're gonna leave this area quite quickly here. So we're looking for this, alright? As you can see, we have the equal lows there, perfect equal lows, and I think this is something I'm looking for. Now, as I'm taking this trade, if that trade fell, the next STA I'm taking this week at least is the setup over here. If we take that previous weekly high time-based liquidity sweep, time-based liquidity. So this is the next setup right here. So either one of those, I said I'm looking for both of them pretty much, and we might even get both. So we might look at this, and we might see an interquartile range sweep like this, and might see us trading down lower after taking this time-based liquidity up here, what of the interquartile range, and then we might trade up here, and then we might see this. So we might see two STAs this week. It all depends on what happens on the federal funds rate meeting, etc., etc. If the rates are lower, that's gonna throw off our buys completely. But I'm fairly confident that it will not, because I have insider information. All right. No, I'm just joking. But you more or less have insider information with the COT. So if you just go and quickly look at COT here, load these shit up. You can see it has actually increased this week. So the amount of hedging for a bullish dollar is increasing, very positive. And you see the open interest here is just increasing as well. Very confident, like I'm fairly confident in seeing an extreme bullish dollar. And you can see the same thing pretty much goes for the euro going down lower. You can see right here, signaling, and this is more or less at new all-time highs now. Very freaking bearish. Right, very freaking bearish. Signaling lower freaking euro prices here. And the same thing goes for GBP actually. You can see it has actually gone lower as well. More or less what you should have been able to see when looking at it is pretty much their major upswing right here. Which of course I talked about, and I talked about that it could be problematic. And I've also talked about that you should watch out for American based currencies, which is not the dollar. And you should watch, because this is also something, alright, you gotta have a brain, you gotta look at interconnections, you gotta look at a little bit weaker currencies than the dollar, but it's still interconnected with the dollar, and etc, etc. You gotta understand those things, alright? So, I don't know, I've never talked about it, but I think I've mentioned it in the document, like in the basic ass document. And of course, like, if you look at that, if you like, have you ever wondered why it's called Australian dollar or Singaporean dollar? I think Hong Kong has a dollar. And New Zealand dollar, Canadian dollar, you know, it's because pretty much their countries is being very interconnected and have pretty much very interconnected system with the American dollar, alright? And they switched it from pounds because they were under the control of the British Empire, and then they switched from the Australian pound to not American dollar per se, but they got a much closer relationship post World War II to the Americas, and no, it became their biggest trading partners. They bought instead, you know, when trading, you buy bonds, right? That's what we're looking at right now. And so they're holding large quantities of bonds, and that's it's super important because now we have seen a big upswing in the yield. All right, so potentially a good opportunity to go and buy some long-term bonds if you're actually into it, because I think you're going to be a great potential to sell on the secondary market in a few years, I guess. I'm not going to do it because I'm not into those risk off. I'm more risk on. Like, you know, I'm more risk averse. I invest in more risky stuff. But if I was smart, if I was a big bank, I would definitely invest in some long-term American bonds here, because there's some good rate of return here. Yeah, but what this means is pretty much, or means in simple terms, I'm sorry for the yapping, it means that we should see explosions in American-based currencies, which is not the American currency. We should see we should look for leading indicators for the American dollar to start pumping soon. And so, what did I tell you guys? Look at the Taiwanese dollar, look at the Singaporean dollar, Australian dollar, whatever, and we're gonna look at a currency later, which has actually exploded. And I don't know if you have seen the generational trade. I missed out on it, and we could possibly have traded it, but it was the Taiwanese overall currency which exploded towards the upside. All right, there was, if you look at percentages, all right, if you look at percentages, and overall focus in on percentages, right? Pips, right? You have 0.01, which is of course 1 pip. Well, this exploded towards the upside in terms of 10,000 percentages, I think, which is like 100,000 pips. So generational trade if you were actually gonna take it. Now I've warned you all before. I don't think anyone traded Taiwanese dollar, but you can go and check that out. You can go and check the currency. But I would definitely recommend you looking at AUD USD, because I want them to strengthen, and New Zealand dollar, right, is pretty quality pairs to EURUSD. But I want them to decouple from EURUSD, since they are weaker. You know, they're interconnected with the American dollar. I want them to decouple and move in synchronous with the dollar as a leading indicator for the dollar to then pump as well. Hopefully that makes sense. But I at least want them to decouple with the euro, which I don't think we have seen yet, but I think we will see in the coming days, potentially an generational trade. And I know Trading Pool is definitely looking out for that. So, I think at least, but I think it would be smart. Anyways, going into the 4 hour here, you can see we just continue pumping. Now, why do I think it's pumping, etc. Well, in all honesty, I think it's the Chinese central bank selling off a little bit here, since a lot of other countries have gotten trade deals. I don't think the Chinese is gonna get in trade deal. I've talked about it. I think they're selling their bonds now in anticipation for that. So this is just a leading indicator that, you know, if we go over at least 5%, as we talked about, it's gonna be chaos. But as long as we are overall staying below this point, and we're staying below this point, I'm not looking for any risk off or any risk adverse assets, or like less risky assets to put my money in. And in terms now, it just looks like a good opportunity for trading FX and trading a lower euro and a higher dollar, since of course this is very much a leading indicator for a higher dollar. And I think we have seen that today. I'm gonna look at its first reactions, right? But I think we saw that after I commented and went back into this. And a lot of people have been asking me, well, why didn't you trade it? Well, it's simply because, we traded, actually, we tried to, but we were actually stopped out on it. So, sometimes, I was trying to, but sometimes, of course, that fails. And we're going to talk about it. I don't know why it specifically failed, but we're going to talk about it. And same thing goes for the USD. Very, very good thing here. Very, very promising. If we look at this, I'm gonna look at the Taiwanese dollar later as well, so you can see the generational trade here. But I sent it to, it was like literally everyone talked about it. It was crazy. I don't know if you're into watching Bloomberg or such, but I love Bloomberg for real. But I think this is very, very promising. Let's see here, daily. We'll go into the date here as well. And yes, it looks very good, because you can see here on the US 10, we have actually taken this. this high right here. But on the US30 we have not taken this, which is a very, very good indicator, because the US30 is usually much more bullish towards the upside in terms of if there's uncertainty or whatever, which is a bad thing for crypto, whatever, etc., etc., which of course is a leading indicator for crypto, stock market, etc., etc., to be bearish. But what this actually indicates right here is that, you know, it's leading to growth, etc., etc. It just is healthy. It's looking healthy. Potentially some central banks selling off a little bit, de-risking, potentially Chinese central bank. However, I think this will be fine. I think this will be fine. It looks good now, and I think they're coming out with a big trade deal, and I think the European Union, etc., etc., is going to buy a lot of bonds. So, you know, now we are seeing this as a leading indicator for the bullish dollar. However, this is going to turn around, and so when we get to a lot of these trade deals, we're going to actually see, of course, initially euro dump, right, which is our thoughts, but then we're actually going to see the euro pump, and that's of course lining up perfectly with the imbalance and of course the real sell side liquidity, which we are watching and having as a drawn liquidity. So hopefully everybody's on the same page here. And you can see on the bond market, it's not looking that bad. As you can see on the US30, it's not looking that bad, right? It's not looking that bad. But on the US 10 here, it's looking a little bit worse here with this gap right here. It's looking a little bit worse, but it's fine. I think it's fine. If I'm honest, I think it's fine. And AGG is also looking fine. And of course, you should then rely on these two, because of course you have to compare and contrast them, I guess. 2 year does not really look that bad. I would like us to potentially deliver down lower, like continue delivering down lower, since that would imply that we're gonna have stocks and crypto pump for a long run and not this short run. Because if you continue seeing this, crypto and everything is gonna go to zero, bro, and I promise you guys it will. But I don't think it's gonna go to zero. Well, hopefully not, because then I will be broke. But I'll continue holding. And look at this beautiful initial mark. Oh my gosh, first reaction. Oh my gosh, look at this. Now, should you buy here? Definitely not. Alright, you should have bought here in the bottom, like we've talked about. However, I think if the yields continue pumping, all of this will get filled, and we're gonna continue down lower, even lower here. So potentially, if you're trading or whatever, potentially consider taking partials or whatever. Personally, I'm holding my investments, bro. It's looking good now. It's looking good. If we just get some good trade deals with buying bonds, etc., etc., pushing down the yields, it's gonna look golden. And I think that's the case. I think that's the case. So don't worry about that. So look at this. It looks super good. It looks super good. For real. Initial, I just needed to look crypto, bro. I just needed to look at the green crypto market, bro. I think I sent you where I bought here and I bought here, but I've also bought here, so don't worry. And I've also bought here and I've also bought here, so you know, I bought all of these dips, so don't worry about it. If you bought up here, don't worry about it. All right, it's gonna go to 10k, I promise. No, I don't know. But if the yields dump, if the rates go slower, if the central bank lowers the rate, it's gonna be pumpy. It's gonna be good. Gonna look at commodities, also looking very good. Gold is dumping. Why do I want gold to dump? Well, I don't want gold to continue up higher. I think gold is actually gonna top out here. Not gonna lie, if I'm honest, I think I would not invest in gold here at least, because I think you know, the rates is gonna go lower, and it's inversely proportional to gold. So if rates go slower, because gold is usually a safe haven for inflation or uncertainty, I think uncertainty will go down. So if you see gold go down, it's also something you can add to notes. If you're wanting to understand a little bit more of the more business cycle view, I've talked about it. It's in the business cycle. You can go into midterm price calls, scroll down to business cycles, click on that, and there you have it. Because I talked about gold, bonds, etc., etc. So you get to understand the whole picture of the cyclical cycles in terms of up and down, blah blah blah. You get it. But yeah, this just shows that we have uncertainty going down, which is a good thing. I want gold to go lower. Same thing goes for silver, whatever, platinum as well. I want those to go lower, and I want oil to go lower as well. I want all commodities to go lower, if I'm honest. Stocks, oh my gosh, Tesla looks beautiful. I've talked about it. It looks so beautiful. It's going to 2k, by the way. I don't want to talk so much about stocks. And look at Palantir. Oh my gosh, people were panic selling here. Alright, I'm just telling you guys. I sold up here, by the way, but I'm just telling you guys. Those who panic sold is stupid, because we bought down here 66, but we sold up here this day pre-market. So beautiful, so beautiful. And then of course it dumped and people were like, I forgot to sell. But don't worry, it's gonna go up to potentially 230 here. But then I'm looking for potential dip and a buying opportunity again. Of course, I'm still long-term invested in it, but just a little bit some small trade. You know, I usually do this. So if you also want to learn this, a lot of people have asked me, how do you invest in stocks or whatever. I invest in real good project, but I'm in specifically focusing on disruption companies. So like specifically companies which is good, which has good revenue. Don't ever invest in like some new mine or whatever like that. It's so bullshit. Don't invest in BS companies. Invest in good established companies, but companies which is fairly priced. You know, you have to wait for a crisis to invest in them. That's exactly what like Warren Buffett's strategy literally is. That's literally what I'm doing. But I'm more into tech companies and more into disruptive disruptive technologies, so AI, etc., etc. So I like these well-established companies, but they are disruptive, right? Meaning they're gonna create something crazy because you know it's literally golden opportunity to like people think this is the end, bro. It's just the beginning. All right, this is the literal AI revolution. I'm sorry. Let's go into FX here. I'm sorry, but what we talked about, I'm just gonna translate into FX. Of course, so everybody understands what I'm talking about because people will be like, "Oh, you should trade FX, bro." Of course, I'm gonna trade FX, and of course, I'm gonna translate all the things I've talked about, specifically now in terms of yields and whatever, in terms of what this means for the FX markets. Uh, Overall, we have seen the imbalance increase here, not decrease, which we were looking for. What this means is that we're going to see a crazy pump in the near term for FX. As you saw, the yields have gone actually up higher. Now they're actually interconnected with the DXY on a day-to-day as well basis. So now not only is a month-to-month basis, it's also a week-to-week, but also a day-to-day basis, meaning it's crazy externally aligned. Instead of seeing declined yield prices, we have seen increased yield prices, which could pose a problem, right? You gotta remember it. If we go over 5% on them, something to watch. That would be an inverse yield curve. That would be over the well-established Fed rates, which is not really that good. We are looking for this overall imbalance, which overall leads us up to this drawn liquidity at max. So up to here, you have very good STA opportunities for reaching higher prices and reaching for more buy-side liquidity, meaning your focus liquidity should be sell-side time-based liquidity, meaning tomorrow you should look for, because I think more trade deals is coming, so you should only be bullish and skip the equal lows, because the equal lows is just there for now. Personally, I think we have left those, and I think those will pretty much be used once we go lower again. So it's just there for tipping the scales, and once we have more engineered sell-side liquidity on one side other than buy-side liquidity, is literally my methodology, we'll tip over the scales. So only focus on the real, the real intrinsic value, I guess. Now another thing I want to mention, because this was also what a lot of people ask me, like literally, how did you become so overall good at fundamentals? Bro, you have a brain and you can think, alright? It's not really at all hard to understand things like that, alright? It's not at all hard to understand things like that, because I'll just take an example. Now, you had a Liberation Day, right? You had the Liberation Day, you had the Liberation tariffs, etc., right? Now, you had these tariffs, which the tariffs was crazy, alright? Don't get me wrong, it was crazy. But do you think the tariffs is gonna increase? No. Like, it would be like literally no difference if they increased and decreased. And so what do you have? Well, you have the scales tipping over in terms of favorability to good news. Now the bad news is already priced in, and you only have good news. So literally that's how I think of it when it comes to Trump. always tipping the scales. Like you should measure it, So now we're more or less neutral, I would personally say. It's tipping towards bullish DXY, right? It's tipping toward that. But then when we have that bullish, we're possibly going to be over the drawn liquidity here, and then it's going to start tipping towards bad news again, and then we're going to see lower DXY in some way. So that's literally how the market moves. It's like cyclical, but not in a way you think, not in a quadrants way or quarter theory or whatever. It's more of a liquidity way. Let's just continue here. So we're gonna go into an overall 4 hour, and then we're gonna look at it. So wow, beautiful. So as you can see, like I was overall thinking this right here. We had a level here. It looked very good. The only option we saw overall was lower DXY here, meaning we were looking for this sell side liquidity to get taken out, and I'm of course still looking for the sell side liquidity to get taken out in the future. However, now personally, I'm overall, what is this? The info numbers, blah blah blah. Let's go with 5-minute chart. Okay, I had no idea what he said. I did not even read it, but you know, I'm dyslexic, so I cannot read that fast. But you can see here, we left a lot of sell side liquidity, but I think now, you know, we have tipped scales, and we should now move towards just reaching for higher and higher prices. So we're now in trading conditions here. Very good. So now you can actually start trading again. Wow. A lot of people took a lot of losses here. A lot of losses, even I included, because we took a loss right here when we were looking at buys. Remember this? Right there where we stopped at. Right here, guys. Right here. Right there. And so we were focusing on high prices, but look at this. We missed this. And this is something you just gotta accept. Sometimes the market pretty much does not go your way. You have the right buys, you have everything correct, etc, etc. You have pretty much your following externals, but sometimes it just takes your stop loss, alright? And that's just because no one can be 100% right. Like, literally, market is random to an extent, but it's also predictable to an extent. You just gotta measure it, and you just gotta look through and look at the holistic view and look at overall that in terms of a long-term perspective, I'll take more wins than losses. So you just move on. Now the same thing here, as you're accepting the loss, which is going to be better to accept losses when you're overall implicitly taking the trades you're supposed to take. Because if you're not taking the trades you're not supposed to take, it's going to be harder for you to accept them, which is also why I want you guys to take a responsibility for your trades, which bleeds into the psychology call I had, which hopefully everybody now has watched. But if you take a responsibility, it will be much easier for you guys to trade, because you're going to pretty much be able to look through the bad trades, because they were not bad trades, it was just following your model. And if you're following your model, is it implicitly bad trades? No, it's good trades actually, because you're just pretty much making your data even look better, like in a statistical manner. But right here, you can see the equal lows right here. You can see more or less that we had sell side liquidity right here, sell side liquidity right here. We swept those, and this is of course a trade recap. So take out your notes, take out your data, hopefully you collect the data on this, because this was such a good STA, and you will see it now. And you see it now, guys. You see that this is right here a good STA, because look, it moved in our favor, but we just got stopped out. Now that happens, we take responsibility for it, and now the haters can hate, because literally it moved our way. And you can do literally nothing about it, but they were literally inversing me, and they got stopped out as well. So, you know, we point the fingers towards them, right? Because literally they know nothing, and we know everything. And as long as we're following a model, bro, they have literally, they're stupid. And so what we were looking for was of course these equal lows getting taken out. We already know explicitly, alright, what we were supposed to look for, because we had external alignment towards the upside, as we clearly saw. That's check, right? Remember, we had of course time-based liquidity sweep. Why? Well, because we had this low, and over this low getting taken out. Now, which is time-based liquidity? Well, this low is the time-based liquidity. Why is this time-based liquidity? Well, this right here is time-based liquidity just because, alright, listen up, this was the previous daily low. Simple as that, right? Simple as that. Now, this was also time-based liquidity, but was this a time-based liquidity sweep? That's the real question. Even if something is time-based liquidity, is it a time-based liquidity sweep? You also have to blend this. No, it's not, because it did not move up to half the range. Simple as that. Check. and that was a no check, right? Because you cannot take the buys right there. Now, could it take the buys here? Yes, you could, because you took time-based liquidity, you took also this low. We had literally some sell-side liquidity, of course, resting down in here, and that's potentially what we lost, but you gotta accept it, right? So you can see right here, potentially we had equal lows, and that's why the market swept once more and swept out all of this, but it still engineered more sell-side liquidity. So, you know, sometimes the market just does some foolish shit. Anyways, so from here, we took buys right here, if you remember. Now we were stopped at right there. Right here, I think, somewhere right here. And then, of course, look at this. Bam. But is this a... No way, it's an SMT trap. No, it's freaking not. It's just the market not following your model, so don't change anything, alright? Now, tomorrow, explicitly, let's look at EURUSD quickly here as well. I'm sorry. Let's look at yeah, I'm just gonna look at Taiwanese dollar as well. TBD, USD. So I think this is it. We can see. I just need to look at the generational trade. Yeah, there we go. What do you think, guys? What do you think? Look at this. Yeah, this, and then yeah, this big ass candle here. What do you see, guys? What do you see now, guys? Is this crazy, right? Exactly, bro. Exactly, man. Exactly. That was the generational trade, bro. The generational trade I talked about it is 11,000 pips. 11,000 pips. We think 100 pips is much. This was 11,000 pips in a second. And this is gonna happen on AUD, guys. All right, this is gonna happen on AUD, USD. AUD is gonna pump. It's gonna be something like this. This is gonna happen on New Zealand dollar soon. All right, I promise you guys. Because look at the yields. This is gonna happen on the New Zealand dollar. Alright, so watch out for this. I've said it in the analysis. Please watch out for this. Personally, I know I'm not really into it, but I will also trade it if I have the possibility to. And then it's also potentially gonna happen on Singaporean dollar and whatever Canadian dollar potentially. CAD, but it's gonna dump instead because you had CAD USD, right? Now that is still because that's not it. Listen up, guys, that's not it. Because then after you have seen those mini dollar, you know, the mini dollar markets pump, all right, you're gonna see the main dollar pump, and that gotta break to the currency. That's gonna break the currency. That's gonna split it in two, because you're gonna see like a pump and dump. It's gonna be like that. It's gonna be a pump and dump scheme, because then after you've seen those currencies, the dollar against those currencies is gonna pump, meaning those currencies is gonna dump. But those currencies are still dollar-based currencies, and so it's a leading indicator for the dollar pumping. Hopefully I understand what I mean. It's just some major sauce here. Yeah, that was the generational trade. Crazy. So let's go into EURUSD. And so our bias, of course, this week has been bearish bias. We have looked for bearish. How we took out another trades? Yeah, I think we took one loss, and it was pretty much at the top here. That happens. You know, we move on, right? You just collect that on it, like I said. Let's cover it. And so overall, what we were looking for, as you can see here on the 4-hour time frame right here, you can see the buy side liquidity here, and you can see the buy side liquidity here. Overall, we were looking for that to get taken out, that cleared. Do I think that's gonna happen now? No, I think that's gonna be a way for the market to tip the scales. I'm gonna include more of my methodology here, and of course, when we have taken out this sell side liquidity, fill this balance here, because we have a lot of sell side liquidity here, it's gonna tip the scale towards the upside, and of course, you're gonna get a lot of buying in bonds and selling in yields, meaning you're gonna get bullish euro again. Up, it's gonna go up. But until now, we're extremely bearish. So tomorrow we are gonna look for a bearish SDA, and it's gonna be good. Now I'm literally so hyped for tomorrow, and that's what we're gonna cover. But first of all, we're gonna cover the trade we took. So it's gonna be a little bit of a trade recap, but hopefully you guys have done it for yourselves. So as we were looking for, right, a lot of people were thinking, oh, it's this time-based liquidity. Yes, it's time-based liquidity still, but was it engineered? You have to look at primary highs, primary lows. Like, we use time-based liquidity as a measurement for primary highs and primary lows. You don't need time-based liquidity. Time-based liquidity is just a creation, right? But we use time-based liquidity to measure time and how much engineered liquidity get engineered at the highs, because engineered liquidities, time-based specific liquidities usually becomes what, primary highs and primary lows. What happens to over primary highs, primary lows? Well, you usually get a lot of engineered liquidity over them, right? And that's why we simply use them, or under them, right? That's why we simply use them. It's no enigma shit. It's literally liquidity. It's literally it. It's literally it. So don't think it's you're trading enigma because you're trading SDA. You're trading liquidity. All right, that's what I want you guys to do. Now here we go. Here we go. Here we get started. So overall, what we saw, if y'all can see this, we overall saw us, as this was not a time-based liquidity sweep, as we talked about, no engineer liquidity. We did not trade. If we traded like this, would this be considered a time-based liquidity sweep? Yes, this would be considered time-based liquidity because then we're below the half bar rates. But that's why I always want more engineer liquidity on this side. Now over here, we not only swept this high, right? We swept this high, and of course that could also play a part because on the DXY we actually swept this high as well, which we just did right here, which is a future projection. And you can see we more or less did it, I think, right here as well, and that was the future projection complete. But I would not consider this a sweep like ICT traders, because I consider the liquidity being over high. And if you look at whatever, you're gonna see that of course the liquidity is over the high, it's not the high itself. But yeah, it's very strange, very freaking strange. So I don't know why it left these equals, but my theory is that it's just gonna leave him, I guess, and I'm just gonna be bearish now. So trade imbalances, trade simple STA AQR sweeps. Don't focus on previous daily high, previous daily low, because we're not gonna go there now. We're gonna dump. So focus on those things, okay? Listen to me, guys. It's better to take one loss and then take potentially another STA the next day if we go up all the way up here again and take then a sell. It's better for that, and then you're missing out on these moves. All right, that's what I'm saying. So that's why you gotta focus on the model. Now, if the externals is aligned, externals selling, you're gonna be mega bearish on USD. You gotta be mega bearish on USD. You're not gonna rely on just overall. You need, like I use always, you need to look at the scales, right? If the scales is pointing towards a certain probability scale, like probabilities, like it's 60 here and you have 40 here, you're never gonna take the 40. You're gonna take the 60, and if that 60 does not work out, you're waiting for the next 60 or 70 trade ish. You know, you get what I mean. And now the scales is tipping towards a very bearish euro, an extremely bearish euro. And so what do I want to do? Do I want to wait, or do I want to get in and possibly take a loss and then get in again and possibly then have a higher probability win? That's what I'm taking, because I want to make money in the long run. And of course, for me to make money, I need to follow the model. And so I'm going to trade a model. I'm not going to wait. That's it, guys. That's it. And so as you can see, we swept this, and of course here we actually take the loss right there. So our trade looked like this, and you can go in and you can check it. You can check whatever it is. You can check whatever. You can check whatever, right? You can go in. You can actually look at what I've done. And a lot of people said, "Oh my gosh, you're so freaking stupid. You're so freaking stupid for taking this trade, bro. Look at me now, bro. Look at me now. Look at me now, bro. I nearly took this. It was literally so small probability chance that we actually would take my high, and if we would now, bro, this would be crazy. Now this is gonna happen again and again and again, so you can just freaking do it, because tomorrow we're gonna have IQ hard sweep, blah blah blah. You get the drill. You're gonna get the drill, right? And I'm gonna talk about it. So collect the data on this trade. Very good trade. Very freaking good trade. Alright, you should be very proud of yourself if you actually managed to take it, because in the long run, and if you can literally go back into the data, check it, previous calls, all of them live, etc. You can literally look at them, look at what we've done, look at the step-by-step process, etc., and just move it on, right? And the reason why we took this is just simply because we had time-based liquidity sweep, extremely bearish externals, and of course, hopefully at least, it has not left us now. So it's still possible that it has left us. If it has left us, overall we took, one good trade. But I think personally we're gonna trade a little bit here. We're gonna form an inequality range here, an Asia range. And why is it an inequality range? As I talked about, it's because it's between a high and a low, which is time-based liquidity. But we're focusing on an intra, like it's what is it called? What does ICT call this? It's like external and internal liquidity. Now you're focusing on the internal based liquidity, more or less. Hopefully that makes sense, but that's like an ICT term for it. So now you're focusing on just the internal liquidity and not the external parts liquidity. you're focusing on internal liquidity in the range, right? And that's an IQR model. It's actually a good explanation for it as well for ICT traders, me included, right? So yeah, we're gonna sweep probably this. I'm gonna have an STA towards the downside tomorrow, right? So this is what we're looking for tomorrow. I'm gonna send these guys in this analysis. Hopefully, guys, like potentially I yapped too much in this call, but I think I dropped a lot of sauce, like unexpectedly much sauce. So hopefully at least liked it. All right, for real, for real. Potentially you can gain some great ass insight in this. So what did you guys think of this call? Would you say? Got it. Alright, that's perfect because we're freaking back. Yeah, not a quick mention. I'm freaking dropping StoICT 2.0. What does that mean? You're gonna get it. But for the charter students at least, you're gonna get the freaking charter students document with my methodologies. You're gonna get it on Monday. Alright, there is no freaking delay. Alright, there's charter student content. You're gonna get it, alright, on Monday. Now for the rest of the students, you're gonna get a lot of freaking other shit because I'm freaking upgrading this whole thing and it's gonna be 10 times better, right? I'm freaking now this shit is gonna be, I'm not gonna speak too much because I don't want to be the guy which speaks too much, but you'll just have to see it. You have to just wait and see. And I think you're gonna like it at least. Like you should like it. But this is gonna be crazy, crazy, crazy call. Can we get more investments calls? Yes, I'm including it. But yes, we're gonna dive right into more deeper level shit. All right, that's gonna be it. That's gonna be it. Yes, and we're gonna get more investments calls if you guys would like to. I'm including it in the my methodology. So in the document, you're gonna get it because you're gonna get my track record over like my investment account, which is even better than my trading account. It's crazy. So it's even better than my trading account. I don't know why, but it's half trading, half investing, I guess. It's like how I do it. It's the best thing. Anyways, guys, thank you all so much. I'll see y'all pretty much tomorrow and Monday, as I talked about. You have a lot of shit coming out, and you're gonna be so happy about the things. So I'll see you guys. I just want to thank you all once again. This call will get uploaded straight away. Thank you all, and I'll see y'all. Bye, guys.